Welcome to this special explainer. Today, we're tackling something absolutely massive. We're going to break down the incredible buzz surrounding the long-awaited National Stock Exchange, or NSE IPO. We've literally been waiting for this for nearly 10 years. And finally, the draft red herring prospectus has been filed with the market regulator, SEBI. Our goal today? To give you a super clear, totally unbiased look at the immense strengths of this financial giant, but also, and this is crucial, the hidden risks you absolutely need to consider. Okay, let's just dive right into the sheer scale of this event. 30,000 crore rupees. Take a second to process that staggering figure. If it actually reaches this size, it's going to shatter records and make history as the absolute biggest IPO India has ever seen. No question. So here's our roadmap for this analysis. First, the country's biggest IPO. Second, where exactly the money is going. Third, NSE's biggest strength. Fourth, the hidden risks to their profits. And lastly, the legal and tech challenges. Let's get right into it. Section 1, the country's biggest IPO. Let's begin our journey by looking at just how monumental this public offering really is, especially since it's been almost a decade in the making. Now, this right here perfectly illustrates the hype we're talking about. Just recently, in 2024, Hyundai Motor India set a massive record at 28,000 crore rupees. But if successful, NSE is on track to completely shatter that, hitting an incredible 30,000 crore. It's really on a whole other level. And honestly, the market sentiment surrounding this is just off the charts enthusiastic. And it's pretty easy to see why. The NSE already has these massive, heavy-hitting institutional giants backing it as existing investors. I'm talking about powerhouses like LIC and SBI. Having these government-backed titans already in your corner, well, that brings a massive amount of weight and confidence to the whole offering. Section 2. Where will the money go? Before we get totally swept away by these massive numbers and big names, let's pivot to a really crucial technicality about where this mountain of cash is actually headed once the IPO goes live. Now, as you research this, you're going to hear the acronym OFS thrown around a lot. It stands for Offer for Sale. Basically, it just means the current investors are selling off roughly 14.89 crore of their own shares. That's about 6% of the exchange's total shares. But here's the kicker. Because no new shares are being issued, the dynamic of who actually gets the cash is very, very specific. So what's truly fascinating, maybe even a little surprising about this OFS structure, is what it means for the company itself. Out of that jaw-dropping 30,000 crore, exactly 0 rupees, yep, 0, will actually go to NSE to fund its own business growth or daily operations. Every single rupee raised is going straight into the pockets of the existing investors who are selling their shares. Section 3, NSE's biggest strength. So now that we know exactly how the deal is structured and where the money flows, let's explore the powerful engine that justifies such an enormous valuation in the first place. The financial leap this company is making is just undeniable. I mean, look at this massive jump in total consolidated income from just over 16,352 crore rupees in the previous year, all the way up to a staggering 18,713 crore rupees in the 2025-26 financial year. And get this, their net profit for that same year stood at an impressive 10,302 crore rupees. The profitability here is honestly staggering. And you know what's fueling this crazy financial growth? Absolute global market dominance. In that 2025-26 financial year, the World Federation of Exchanges recognized NSE as literally the world's largest multi-asset exchange. They hold over 11% of the global cash equity trading share, and they command over half. We're talking 51.18% of the world's equity derivative contracts. On top of all that, they've been the largest derivative exchange globally for 7 straight years. Talk about a winning streak, right? Furthermore, the runway for future growth looks absolutely huge. Market expert Ratiraj Tibrual from Choice Capital Advisors makes a brilliant point here. In India, only 13.5% of the adult population invests directly in the stock market right now. Think about that. We are barely scratching the surface of retail participation. As that number naturally grows, NSE stands to benefit massively. It's like a giant wave they are perfectly positioned to ride. Section 4. Hidden risks to profits. Okay, so the profit engine is roaring and the global market share is massive. But let's take a sobering reality check. We need to expose the vulnerabilities that are quietly hiding within those massive income numbers. The crucial vulnerability here is pretty glaring once you see it. A staggering 60% of NSE's revenue in the 2025-26 financial year came entirely from options trading. That means, despite holding the title of a multi-asset exchange, they are dangerously reliant on a single stream for the vast majority of their income. It's like putting all your eggs in one very specific basket. And because of this extremely heavy reliance, expert Ajay Garg from SMC Global Securities rightly warns that the exchange is highly vulnerable to regulatory shifts. You see, regulators keep a very close eye on the NSE. Any tightening of future and options rules or sudden policy changes could instantly and severely slash the exchange's primary source of profitability. But it's not just the regulators you have to watch out for. There's also the constant threat of technological evolution. As artificial intelligence-based portfolio management, predictive analytics, and fully automated platforms become the norm, retail investing habits could fundamentally change. A massive shift away from high-volume manual trading by everyday folks could quietly but steadily erode that primary revenue source over time. Moving on to our final section, legal and tech challenges. Beyond market habits and potential regulations, we really need to examine the fine print regarding NSE's operational and legal history. Because, well, their operational history reveals a pretty bumpy road. The path to this IPO definitely hasn't been smooth sailing. Remember, their very first listing attempt stalled nearly a decade ago in 2016 due to regulatory and legal issues. Fast forward to February 2021, and a major telecom connectivity glitch caused trading to be completely halted for over 5 hours. And just recently, in March 2026, they had to file revised settlement applications for legacy colocation and dark fiber cases, which are essentially controversies over giving certain traders unfair, high-speed access to the markets. These were actually still pending final decisions when the draft prospectus was filed. This is exactly why market watchers strongly advise digging into the fine print of the DRHP. It explicitly outlines ongoing corporate governance cases, pending litigation, and some significant technical risks. Keep in mind, the core operations of the NSE rely entirely on complex trading, clearing, and settlement systems. This means cybersecurity threats, potential technical glitches, and their heavy reliance on third-party tech infrastructure are not just hypothetical. They are very real, ongoing concerns. So, let's bring it all together and summarize our analysis for today. Potential investors are basically weighing two completely different sides of the coin here. On one hand, you have immense global dominance, unparalleled market share, and staggering financial growth. But on the other hand, you're facing very real regulatory vulnerabilities, a risky over-reliance on options trading, and a history of some pretty serious technical and legal flaws. Knowing that you are looking at a heavily scrutinized, globally dominant monopoly, where the 30,000 crore in IPO funds goes entirely to existing shareholders and not the company itself, the final question for you is this. Are you buying into the ultimate unstoppable financial engine, or are you trying to catch a falling knife of regulatory risk? Take these facts, weigh them carefully, and figure out where you stand. Thanks so much for joining me on this explainer, and keep learning.